Hi everyone, it's the January 20th edition of iTrust's weekly newsletter, and today we're going to talk about weapons of mass destruction. Why do you think we're doing that? It's because of a little shock I received in the mail, which is my monthly statement for my credit card bill. Yes, we actually think that credit cards are weapons of mass destruction. Let me tell you why. First of all, let me tell you the shocker that I received in the mail. I pay my bills on time. I spend a lot of money in my credit card for work-related expenses as well. And there was about a 5,550 rupee finance charge on my bill, which shocked the wits out of me. And that's why I thought this week we'll talk about credit cards and how to deal with credit card issues that arise. So, first of all, credit cards are invisible money. Effectively, you're spending money on your plastic card with money that you'll have to pay back maybe a month or 45 days later. And that's why credit card marketers exploit human psychology effectively, because we're not spending money at that point in time. The psychology is that people will end up buying goods worth a lot more. What happens is that you end up buying goods that you don't want with money that you don't have, and before you know it, at the end of the month you've accumulated a huge balance in your credit card, and it causes a huge problem because you don't have money to pay it back. And then it leads to financial instability and insecurity because you've got a huge amount of credit card debt. You don't have the income to actually support that. So, these are some of the problems that happen, and the issue, I think, gets intensified because credit card loans are perhaps the most expensive kind of loan type on this planet. If you're wondering what the interest rate charge is, it's about 30 to 45% per annum. Compare that to a home loan interest rate, which is about 10.5% right now, or a personal loan interest rate, which is anywhere from 16 to 20% or so. Credit cards are almost double that interest rate. The second thing is that there's numerous amount of charges that are levied for you, or on your expenses in case you're late, or you've got extra finance charges, or if you're withdrawing money from an ATM, or you're borrowing some cash and so on. You could have 2.5% of transaction fees, and then finance charges on top of that. You could have late payment fees, as I received in my little statement. On top of that, if you don't pay your bills on time, what's going to happen is you will end up affecting your credit history and your credit rating very negatively, and over time you will find it very, very difficult to be able to borrow money for more important things in life, like buying a car if you're taking a loan, or getting a home loan, and so on. So let me just give you some tips on how to deal with credit cards. First of all, don't fall for the marketing ploys of various marketers when they're selling credit cards to you. One credit card is exactly the same as another. Don't just increase your credit limit on your existing card if you don't have the monthly income to be able to support it. Don't take extra cards just because you'll have lots of spending power, because ultimately it's money that you've got to give back. The second thing is you should always pay your credit card dues on time. Otherwise you will be charged exorbitant rates of finance charges and interest charges on whatever you've got pending on your credit card, and that could lead to a lot of financial ruin. And we certainly deal with a lot of cases on a weekly or monthly basis who suffer from the vicious cycle of credit card debt. The third thing is always check your statement. Credit card companies are also human, and they are very prone to errors and mistakes on your credit card bills. Somebody might have overcharged you, there might be some fraud going on. If you check your monthly statement regularly, whenever you receive it in the mail, then you can at least verify that expenses on there are indeed ones that you have incurred. The fourth thing I'd like to say is don't borrow money from an ATM on your credit card. It'll be very, very expensive. Borrow money only from your savings bank account and use your debit card for that, which brings me to the final point, which is spend money that you have. And that's where a debit card is a lot more effective because you're not really borrowing money from anybody else. You're not going to be incurring finance charges, and you'll stay within your limit. So try and avoid the pitfalls of invisible money and weapons of mass destruction, and stay away from debt. Thank you.